Welcome back to the Raw Selection Private Equity Podcast. Joining us today is Bobby Ocampo and Sheldon Lewis, co-founders and managing partners of Blueprint Equity, a growth equity firm investing in the B2B software sector. What's really interesting about this conversation, guys, is they're building infrastructure within their firm, delivering significant results within their portfolio, obviously on the back of a successful raise. But these guys are out there to set records. This is a really insightful podcast. Let's dive in. So firstly, congratulations on the successful raise of Fund 3. But if you guys could kick us off by give us a brief insight into you and Blueprint Equity, please.
Yeah, I'll kick things off. Thanks for having us, Alex. It's great to be here. So Blueprint Equity was founded in 2018. Bobby and I actually have known each other since 2008. We did investment banking together at Piper Jaffray and their tech division. Stayed very close, went different ways to different firms, but came back to the same thesis that we thought was completely underserved. And that's what we call early growth equity. So businesses doing, call it 1 to 7 in ARR, growing north of 75% year over year, bootstrapped or capital light. So we're usually leading the Series A, first institutional round into these businesses. We really like B2B software, vertical niche kind of operating systems of record. It's been a great run. We're, as you said, we just raised Fund 3, which is a $333 million fund. Very fortunate Fund 1 and Fund 2 have done well. And now just continuing to build out the team. We're at 21 now, so huge team for a fund our size. Heavy outbound sourcing, so we try to find the entrepreneurs. Obviously welcome them to come to us, but like to try to track them down as well. And I've spent a lot of time and money really building out our ops team, which is important to us. So I have an ops team of 6 now, all free for charge for entrepreneurs, to help them with things like AI, which I'm sure we'll talk about on the podcast, recruiting, go-to-market, RevOps, all that good stuff. So yeah, that's kind of high level.
Marvelous. What's one mistake that you guys see private equity, growth equity, all their portfolio companies making, and what would you suggest to correct them?
Oh man, that's a tough question. Oh, I don't know. What do you think, Sheldon? Not I mean,
Yeah, I think, there's probably a long list, and we all, none of us are perfect for sure. Um, I would say we're kind of more anti VC than anti PE in a lot of ways. Like we don't subscribe to the spray and pray, and um, you know, uh, 2 out of my 30 investments will be unicorns, and the other 28 will be zeros. I'm only going to give time and attention to the ones that are performing extremely well. So we don't really subscribe to that. But from a PE standpoint, we probably identify closer to the PE world, where you are investing in the actual business, not just the market or the entrepreneur. Um, you really look at the numbers, and you try to add operational value. Um, so yeah, that's my take.
So the software industry has seen, some turbulence and challenges certainly over the last couple of years, and continues to do so. How are you finding the market from that perspective with regards to underwriting, those software businesses, and kind of what's separating the good assets from the weaker ones?
yeah, Sheldon, I'll start. Alex, I'd say it's pretty choppy right now. Um, I think the retail investor is bucketing all of software into going to be disrupted by AI and is worth a lot less than what we thought. We obviously were biased, but I tend to disagree. And I think what's happened is that there's some really good businesses that are getting bucketed into that. and you've seen like a really nice rebound from a lot of those assets since the bottoming that we saw earlier in the year. Um, but I think it clearly, there's a lot of fervor and excitement around AI and AI accelerated growth and mostly growth, and it's largely driven by AI, but growth is still the number one driver for the multiple expansion. And inverse if and so yeah, I think it's really that as is that are you building are you reaccelerating growth through AI and uh if not, then you're getting very much dinged by the average investor, every investor, and so and that's playing out. We're seeing it too, even in the private markets. But I still think though, up public private market, everyone is still trying to figure out their footing. I think people would be lying to you if they said, "We know what's gonna happen and how products are gonna get disrupted or not disrupted soon." I don't think anyone, like, knows, right? So we're still, like, barely in inning 1 of this, and, yeah, I think that maybe back to earlier question, I think if people are saying a lot of the same things or but, it's still highly inconsistent what we're seeing. And I think that's giving a lot everyone a lot of, pause right now.
So you guys mentioned you have a large value creation team, which I always applaud, and I think the most successful firms that we see in private equity are building those teams and building their structure. Firstly, how do you structure your value creation team? When I mean that, do you have industry kind of, or what I should say is kind of specialists, like a finance specialist, a go-to-market specialist, etc. And then secondly, how what are you actually seeing the value creation team operating in this space is most, whether that be pricing, talent, sales, marketing, etc.?
Yeah, it's a great question. So you're right. So they are more specialty. So we have someone that on the go to market side. If you kind of look at taking a step back, if you look at these businesses and where they are in their company life cycle, again, they're fairly early. I'd put them like in their teens, I guess, if they were human. Um, and so when you're at that, call it 2, 3, 4, 5 million in ARR, a lot of times, no matter what industry you're in, you're kind of struggling with the same problems and you have the same opportunities. And so all of these companies want help with, recruiting. They all want to find, they just got the first institutional round. They want to put in place their first like director level talent that they just haven't had the capital to do so before. Director C level talent. um they want help with go to market. They're clearly doing something right if they're growing at 100%, 200% year over year, albeit on a smaller number. But they want to institutionalize that go to market engine. Before, maybe it was just founder led sales or word of mouth or inbound. um uh, so they usually don't have, from like a RevOps reporting standpoint, they usually don't have a lot of that together. Even a financial model um, that is detailed enough to really help give them the vision that they need to navigate the waters. So those are all things that it seems like, and we've done 26 deals now, and every deal we help out with. So those are the problems we kind of like backed into hiring for those positions. So we have someone that focuses on go to market, and all he's done was go to market consulting for the last 14 years. We have someone that focuses on AI. As you can imagine, especially in this day and age, a lot of people want help building out their own internal AI. They want advice on which direction to go. We have someone that focuses on recruiting, and on and on. All of these again are free for the portfolio companies, which gives them, which doesn't make them think twice for using it. So even though we're minority shareholders and we can't, obviously force them to do anything, there is a really good pull that we experience, because these are things they want help with.
Okay. And you mentioned AI. It's on the notes, on the lips of everybody at the moment. I think it's two questions around this, one at portfolio level, one at firm level. Firstly, how are you leveraging AI at the firm level currently?
Yeah, I'll start. Kind of anywhere you can imagine is the quick answer. We've been implementing AI internally for the last 3 years, so it wasn't new to us. We really started on the sourcing side. So V1 for us was let's find companies that are off the radar using AI, and not in the databases that everybody uses. Uh, Step two is let's prioritize those companies based on what is important to us with publicly and private data that we can gather. Um, and now step three is really making sure that we don't nothing slips through the cracks on the sourcing side. So if someone said follow up in 3 months, we're on it. We get the right notifications and our team is prepared to send the right messaging. But now internally, it's a lot more. It's it's helping us evaluate deals. It's using all of the in AI these days. You talk a lot about being in the workflow and proprietary data. We have a lot of proprietary data. In the probably at this stage hundreds of thousands of conversations that we've had, um, and so using all that to our advantage and syncing all of our systems to talk with each other. We've been making a strong push for that, so it's helping a lot from an organization standpoint, from an underwriting standpoint, and from a portfolio ops standpoint now.
Sorry to interrupt. Just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast. Okay. And from a in the phone level, you mentioned you've got like notifications and other bits and pieces. Are you using particular software that helps you that? I mean, most private equity firms are renowned for using Excel spreadsheets for everything. I'm guessing that's not giving you the notifications you need to reach out to this person at the right time. What exactly? What are some of the tools you're using to help you with that deal sourcing and begin to reach out to the right people at the right time, rather than just every quarter dropping them a cursory email saying, can we acquire your business? Which is something I get probably on a daily basis from various different businesses that have done absolutely no research.
Yeah, it's a good question. So the way I would think about our AI tech stack is not just like a single, we're not just using like Claude for everything. Claude is our uh, MCP, so it's like the layer that, the tool that we use to talk to all the other tools. But we've layered in, probably over the years, 10 different tools, AI tools that we've stitched together. So when I say we have our own AI, like we're not writing our own AI code. We are coding to connect everything, but it's really leveraging other AI solutions and stitching them together for something that works for Blueprint.
Marvelous. And talk to us a bit about your direct sourcing. I think every firm talks about it, but whether they execute it as well or they just kind of have a direct sourcing element, but realistically just use investment bankers, etc., to introduce. What are you guys doing there proactively to try and bring in deals and connect with people on a proactive basis?
Well, I think Alex on that, like it really comes down to the size of business and the size of the fund of the private equity or growth equity fund. So, I mean, generally, I don't know if you agree, Sheldon, but if you're kind of, I'd say north of a 500 million, 750 million USD fund, I would say that almost all of your investments have to be banker sourced, right? I mean, at that size, you're looking at businesses that are at least the US, Alex, like north of 10 million in revenue. and typically everything north of 10 million in revenue is banked. So I think it's really come down to that. I would bet you pretty much every multi-billion-dollar fund, there's no reason really for you to be sourcing, like having a large army, because pretty much every deal you're looking at is represented by someone. So I would say that's one element. So how big is the fund? And the other is like you look at how big the team size is, right? And we have over 20 people at Blueprint, and sure, compared to a multi-billion-dollar effort, that's not big. But for our fund size and our target investment, it's very big. So what we do is, I mean, we have what, Sheldon, over, I guess, like, close to 15 full timers, sourcing, talking to businesses, tens of thousands of businesses every year, and that's what it is. It's the pounding the pavement, phone calls, emails, visiting, a lot of visiting, and that's kind of what you need to do, because all businesses are sub that 10 million in revenue. There can be 1 to 5 million in revenue, and it's not big enough for a big fund to invest. It's not big enough for a banker to represent the business, right? So it kind of falls this nice sort of sweet spot for us, but it is up to us to uncover and unlock the opportunity and spend time with the entrepreneur and help him or her build their business. So that really is on us. So I don't know. Those are, I think, some of the elements. It really depends on size, and we're still, we like to think, like flying under that radar.
Makes sense. So beyond the standard financials and growth metrics, what do you guys look for that are the less obvious signals we before investing?
I think obviously, I don't know if it's less obvious, um, but we do a lot of market work. Where do they fit? Are they the number one, number two, number three player? How vulnerable is the number one, number two, number three player if that's not them? Um, Obviously, something that can't be ever underrated as a minority investor, which we typically are, at least historically, is the entrepreneur. Is this person, they did a great job getting it to 2, 3, 4. Are they the right person to get it to 20, 30, 40, or beyond? And so that's a big part of underwriting. I don't think, a lot of large like buyout funds probably don't care as much about, because it's, if they're buying a majority of the business, they can run their plays and hire who they want if it's not the person. But we're just as much betting on the jockey as the horse. So those are two things, but I don't know if I missed anything, Bobby. Are you good?
Well, I agree with that. I agree with that.
Okay. And what do you, and from an industry perspective, what sector or trend do you think most kind of interests you as investors, or the market's potentially underestimating, especially given the reliance on the narrative that that software is going to be killed by artificial intelligence?
Let's take that on.
Yeah, I think like they're it's so it's changing every day, right, Alex? But I think the common theme, one of the things we don't look for, is a lot of horizontal businesses, right? We look at pretty like tightly knit verticals where uh we have the opportunity through our investment to like own that big audience, right? So like, not to speak poor, but like a company like a DocuSign, right? Multi-billion-dollar company. It's great, right? But it's a lightweight solution attacking unlimited number of verticals, right? Like that's the one that's like a tougher one for us to do. And so, I think frankly, like lower hanging fruit for AI to disrupt, we're not, we're trying to look at businesses that have really they deeply entrenched um, uh, tools for every and real work operating workflow, where it's a product that our portfolio companies customers are using all day every day, and not just to do one little thing, it's to do everything. So I'd be lying if I told you what where there's certain sectors we're looking for, right? Because we are generalists within tightly knit verticals, right? So it's probably better to describe like what we don't do, but Yeah, anyway, an example is like, yeah, I mentioned like a DocuSign, like horizontal businesses that are more lightweight, that they're tougher for us.
Okay. And from a you guys are going through and you're growing your firm itself at the moment. And obviously, you've got a lot of fast growing businesses underneath you, giving you successful fundraisers, obviously, doing something right, to say the least. Private equity, private equity firm level and portfolio level demands speed. Any business would be said of that, but certainly for us, we're very much the same at the moment, trying to go through the rounds, trying to scale and grow. How are you guys building a culture that can move fast without burning out your big deal origination team, your value creation team, and obviously your portfolio executives that are chasing the big unicorn exit?
Yeah, I think it's a good question. I think to me, like speed um isn't necessarily about always working faster. It's about like removing some of the friction that makes folks work slow. So the ambiguity, reworking things, certain bottlenecks. Um, and so if you build that, and I think pace kind of takes care of itself without grinding people down. From a culture perspective, um, we have someone here internally that helps with culture. Luckily, planning events and making sure that everybody likes coming to work every day. Another thing that quite honestly probably helps from the burnout is we're in office 3 days a week, remote 2 days a week. People are still very much working those 2 days, but I do think it really helps to have those 2 days to if need to you want to go for a walk, or you just need to get some laundry done in between calls or something like that. I think that helps quite a bit, and is probably unique for funds like us.
And what do you guys watch, read, listen to that you recommend that others should check out, please?
Well, obviously the private equity podcast, right? Um, but yeah, I mean, I think both of us read the term sheet every day. It's an email.
Pro
Axios,
rata.
pro rata.
Yeah.
Yeah. What else,
Like,
Bobby?
like what's that? Like insider buyouts, right? Like all that. Like, I mean, honestly, everything on like I don't know what it, but I feel that algorithm on LinkedIn has gotten a lot better over the years, right? So, it's seen me kind of consume a lot of same, uh, like following the same people or whatever. So I feel that does a even though there's still a lot of noise. I feel if you look at the first like 5 minutes of LinkedIn for me, it's all of all the things we're talking about. It's like, a private equity fundraising. It's a lot of managers trying to raise, a lot of entrepreneurs talking about how, software will or will not play with AI, right? So I don't know. I feel like it's just been so much better for me. Aside from everything Sheldon said, I feel it does done a nice job of curating, for me now, where I actually don't have to go and search around as much.
And if anybody wishes to do so, how best do people get in touch with you guys post this podcast?
Yeah, no, you could just go on our website. We have a email that link that you can shoot anything over to us, or fill out. Um, Obviously, you can always track us down on LinkedIn. But yeah, whether you're an entrepreneur or just another firm in our vertical, we'd love to talk to you.
Marvelous. Well, thank you very much for both of you coming on to the private equity podcast and give us an insight into SaaS investments and also the growth and fast growth of your particular firm. So thank you very much for coming on.
Thanks, Alex.
Thank you, Alex. Appreciate it.
And as always, thank you very much to all listening and tuning in today. Till the next time, keep smashing it.